Welcome everybody, welcome. We're just going to send this link out to the community and then we'll get started. Any questions, if you guys are here, welcome. Start posting them in the chat. Happy to answer some questions for today. And we're going to do like a little bit of a review in the week as per normal. Look at the week, look at what is potentially to come. It's an opportunity for anyone, whether you're from the free Discord, pay Discord, or if you're not even in the Discord, if you're just from the YouTube channel, to come in, have a chat, and answer some questions. So again, every Sunday, every fortnight, I'm probably going to host one of these YouTube lives, and they're going to be recorded. So if you do miss it, or say you can only see a part of it because of your time zone, that's also completely fine. But they're probably going to be roughly at about the same time, is what I'd say. So yeah, that's kind of what we're looking at. How was everyone's week? We'll start with that. How was everyone's week this week? How did you guys find it? Obviously, NFP was cancelled. Government shut down. Did you guys find it easy, hard, tricky, about the same? How'd you guys go? Let me know in the chat. And once we do get to 10k subs, which is very, very close, we're about 9.6. When we get to 10, I'm going to give away a few things. So I'll talk more about that on today's stream, but I'm thinking potentially accounts, discounts to my premium services. A lot of people have been asking about that too, so that'll be coming very, very soon. Very soon. But welcome to everyone. Happy Sunday or Saturday, depending where you're from. Here in Australia, it's about 10:30 in the morning. So for us, the markets are ready to open tomorrow. Welcome. Greetings. At the moment, I'm just on the 1 minute chart. I'm going to wait for everyone to come in and then we'll slowly get a start out. We'll talk about actually my thoughts for the week and a few exciting things that I've got in play. I've been trading my fund of futures. Top Step is my main prop at the moment just because I've been on a bit of a streak with them. But I've also expanded. We'll talk about that today too. I've expanded and there's also a little challenge I'm doing too. You may have heard of a guy called Patrick Wheeland. So he's got a tournament. I'm going to be doing that this week. For a bit of fun, mix it up a bit, so I'll be documenting that. There's a few other videos I got planned and I'll continue to ask you guys. So if you're from my Discord, check my YouTube community page. I'm going to put polls there, but also probably my Discord too, just to let you guys know when things are happening, but also get your guys' feedback, because that recent video that I posted, I've been thinking of making that for a while, but you guys voted for that, how to collect data. And we'll talk about that today too, how to collect data. A lot of people are wanting a part 2 of how to use ChatGPT. And I think that'd be a nice video too. So again, the comments on YouTube, we can interact like that. We can interact on Discord. But any video ideas you guys want, and if there's enough people wanting it, I'm happy to make it too. That's also completely fine. But I think this week was interesting. London session, there wasn't that many trades for me. Asian session, a few. The week was very scattered in terms of when I traded. It wasn't typical, because we had all-time highs many times, and all-time highs. Welcome to everyone joining too. Midnight in the UK. There you go. Hi from Australia. Whereabouts in Australia? And at all-time highs, a lot of people ask me, we can discuss that today. They ask me, Ruben, how do I trade all-time highs? And we'll talk about that. Just keep in mind, guys, you don't have to trade every session. Just because it's London session, just because it's Asian session, just because it's New York session, and it's typically when you trade, it doesn't mean you have to press the button. A lot of people are too eager. Oh, let me trade. Don't expect to trade. Trade if the conditions are suited for your model. That's what I'd say. And we'll start with that too. Newcastle, nice. Yeah, not too far from here. I'm from Wollongong. For a lot of people, that name might sound a bit weird, but you'd probably know. Not too far, about 2.5 hours probably from where you are, depending where in Newcastle. But yeah, I've been to Newcastle. It's quite nice. Used to work at Beresfield there. It's close-ish, around the same area. But yeah, post your questions in. I'm going to start doing some reviews. I'm going to answer some questions in the chat, and that's kind of how I run these. Once a week, once a fortnight. They're free, and it's just an opportunity for anyone, whether you're part of the free or the paid community, to come on here, because my inbox for the premium members is always open. I'll talk to a few people like that, and I'll work with them, help them improve. But for everyone else, this is an opportunity once a week to hop on board. That's what I'd say. Now, you ask a good question there in terms of what to do if you're in a combine and you feel like you need to take a trade. Well, here's the thing, and we can discuss some things now. We'll get started. If you feel like you need to take a trade, there's a few reasons, and I can speak personally based on my previous experiences. When I've felt very eager to take a trade, when I'm like, yeah, I need to take a trade, I need to take a trade, it comes from a few areas. Number one, I'm impatient, but why am I impatient? And that's the thing, like, why is the important factor? Doesn't matter if you're looking at collecting data or, you're looking at doing anything really. Why is the important part? And for the meantime, I can't type on the screen, but that's okay. We'll fix it up. So why am I impulsive? Why are you impulsive? Why do you feel like you need to take a trade? Because you want to make money. Why do you feel the need to make money? Because you probably need the money, and I did too, right? And you want to improve, and you want to have that pressure on yourself to succeed. But there's an influencer, and you'll know him if you've seen the post. He's very sarcastic most of the time, and you probably know who I'm talking about. Nothing against him, but he actually posted something the other day that was quite relatable to what I believe. And he said something about, don't start trading if you really need to make it work for yourself or your family. And it's real advice. It makes your life so much harder, when you have to come from a position where you really need the money. And so you feel like you need to take a trade because you feel like you need to make money, because you feel like that's what is required to be successful and profitable. It's not the case. Profitability is long term, right? I wonder if I can draw. I can't, that's okay. But profitability is based on, collecting data, and profitability is based on showing up every single day in the market, right? So feeling the need to take a trade all the time, it comes from impulse, but it comes also from prop firms. Most prop firms, they have 5 winning days. You need 5 winning days to succeed. You need to make $2,000 before you can then get a payout. It's not how real trading in a personal account works. And I get it. You might be on a Top Step account, Alpha Futures account, My Funded Futures account, Take Profit Trader, who I'm now funded with. And, you might be like, oh, well, I only need 2 more days. There's 2 more days in the week. I may as well trade. I may as well place a trade. And that's also where it comes from. Because prop firms are designed to make you feel that way, to make you feel like you need to trade all the time, to get that carrot, to get that golden carrot, which is the payout or passing the account. So that's an interesting thing. But yeah, if you feel like you need to trade, just remember profitability is not always about trading all the time. It's about showing up and placing a trade when the market suit your conditions. And a lot of people come to me and say, Ruben, hopefully you can see my cursor, guys, but they might say something like, I think we're just frozen here. I wonder if I can open up a new screen. That's okay. Yeah, they say, Ruben, why not take a trade here? It's a macro. Well, because we're at all-time highs. And that's something I wanted to discuss today as well. Being at all-time highs, that straight away for me means I'm either not going to trade or I'm going to trade lightly straight away. Why is it the case? Because I've been burnt way too many times. So that's the truth. I've been burnt way too many times trying to short, and everyone's been there. You think you can catch the top, and yeah, sometimes you look back and you go, wow, the market actually did, reverse. I'm just going to try and refresh my page. The market did actually reverse, and you go, well, I could have caught that. But the reality is, guys, you're never going to always catch the top. Like here, look, that's a macro. Look at my cursor. This is the 550 to 610 macro. And yes, that is the top of the day. And yes, someone might have been lucky and caught it, but you're not going to do that. It's not going to happen. Most of the time, you're going to try and catch the top at all-time highs, and you're going to get wrecked in the market. So you just got to sit in your hands. And this day, if you're from my premium Discord, I just sat in the corner and told them there's no trades. Like, yeah, we moved a bit here, but that doesn't matter. I'm not willing to engage that. For me on this day, I actually took a trade in an Asian session, which I took a short here and a long here, 2,000 for the day. That was really good. And I held that trade, pyramided in, took my partials, pyramided in, and I got stopped out here. Once we're here, that's done. That's it. You got to kind of separate yourself from needing the dopamine hit that comes from winning a trade. So that's what I'd say in regards to your question about feeling like you need to trade. You say my plan for the 4 weeks is to focus on the protocol and not the results. Just want to build consistency with analysis, mindset, and control of impulses. And at all-time highs, a little tricky, yes. And it's a good time. At all-time highs here, this is the all-time high, right? This one here. At all-time highs, here we go. Beautiful, I can draw again. At all-time highs, practice your patience, practice your consistency. And that's what I'd say to anyone. When you buy an eval, if I could go back, I would tell myself, Ruben, buy the eval. Don't worry about passing it. That's not your goal. Your goal literally in the first 6 months of trading is not to try and pass an eval, because even if you get lucky, even if you full port an Apex account, even if you full port a Top Step account and pass in 2 days, you're not going to get a payout because you haven't proven to yourself that you're consistent. So what you're doing there is really good, and I would encourage anyone to do that. Focus, just take a month. A month is nothing in the grand scheme of things. Take a month and see how many winning days out of 5 you can have. If you can get at least 3 winning days out of 5, you're in good hands. If you're getting 1 to 2 winning days out of 5, you need to do more study, you need to do more data collection. Yes, there may be weeks where you might have 2 winning days, but overall, on average, you should, to get profitable, to make payouts, you need to be winning minimum 3 out of 5 days in the week. That's just how it is in terms of, risk reward, in terms of win rate. So you just need to focus on that. And that's what I say for anyone. Just take 1 month, that's it. And in that month, collect data, collect screenshots, do everything you need to do. So that way you can come after that month and you know what you need to work on and you can actually implement that. Otherwise, all you're focused on, you buy an account, maybe you're 2 months into trading, and you say, oh yeah, I'm just going to buy this account, I'm going to try and pass this eval. Why am I not passing this eval? Why am I not passing it? Well, you haven't focused on the model. You haven't focused on your data collection. You haven't focused on seeing the things repeat. You don't know what your edge is. You don't even know what your strategy is. You don't even know how it's meant to play out. You couldn't approach the market on a day-to-day basis with exactly what you'd like to see, and you're unable to sit back when you don't see what you need to see. So that's my response in terms of that. It's really important. But what you're doing is good. What I use when copy trading, at the moment, I don't copy trade. It's something this month that I'm going to start to do. So I've been stacking up a few funded accounts recently with Take Profit Trader, also with Top Step on the side there to add onto the arsenal. And so I think I'll start to do it with Top Step. It's just inbuilt. It's quite easy. I know a few people that have done that, and I think that's what I'll start to do. Probably from, maybe not this week, but the following week. So I want to just have a go at Top Step, Take Profit Trader, see what I can do there this coming week, and then we'll get into it. Been training Forex, would like to get your opinion on my strategy. Is following the daily trend and only taking the setup when it aligns with on bias. So if it's bearish, I wait for a previous day high, market structure shift on a 15-minute, and then use ICT entries. Yeah, I mean, doesn't matter if you trade Forex, futures, Bitcoin, gold. What I teach in terms of ICT macros, in terms of market structure, your strategy should work on any asset class. That's the first thing I'll say. If it doesn't, well, you don't know your strategy well enough, because market structure is market structure. There's just different volatilities. Now, in terms of what you're saying there about previous day high, I think you're saying PDH, previous day high and market structure shifts. Yes, but I'd ask you questions. Watch my previous video on data collection. Watch that. And I go through a few questions in that video. I discuss, what you should be looking at when you screenshot your trades. When you screenshot a trade, whether it's a long or a short, you can't just screenshot it and put it in a journal. It doesn't matter if you use Notion. Who cares if you use Notion? Who cares if in Notion you can see win, loss, win, loss? It means nothing. What means something for your strategy, Shivam, and also anyone else's, and for mine, is yes, you collect the data, say in Notion or in Discord or through ChatGPT or in a Word document. Collect it however you want. Doesn't matter. But then what do you do with that data? Are you looking at those screenshots at the end of the week? Are you seeing patterns? If you go to the end of the week and you can't see patterns, you haven't looked hard enough. And if you're not sure, have a look at that video. It's really important, because I go through some of the questions you can ask. Some of the questions you can ask about, what patterns are repeatable? What happened with my risk management? Did you get stopped to break even? Did you get stopped to break even? Then did you take a full loss or whatever happened? But you need to document these things and ask why. You need to have questions, especially in the learning phase. The first 6 months, I had all these questions. Why does price do this? Why is it doing this? Why after accumulating, for example here, why after accumulating does price suddenly move up and then reject? It's called the power of three. But at the start, I didn't know that. I just had questions, and then I had to go and discover that for myself. But I had the questions. I wrote down all these questions. I had about 20 or 30, and then I went back to the markets. I went on YouTube, typed up, videos. I watched ICT's lectures. I asked my mentor at the time as well when I was learning. I said, what are these things? And then based on all that information, and then based on me looking at it, I discovered what certain things were, and I started to see repeatable patterns. So I think the strategy is fine. I think it works, but you need to go watch that video, and there's a few questions in there that I ask. If you can hand on your heart, if you can truly say that you know all of that, then you'll be in good hands. But if you can say to yourself when you read those questions, you say, I'm not actually sure, then do as much study to answer the questions. And there's plenty of videos, either my stuff or other people's stuff, heaps of stuff. Dan says, is it normal to be so bad, right, at backtesting compared to trading live? Is it normal? Well, everyone has different experiences, and it's funny, Dan, because I'm going to release another video soon on backtesting. I'll probably record it this weekend, today. Some people go better at backtesting, and other people go worse at backtesting compared to live market conditions, because there's two things. When you're backtesting, you see each candle, right? Each candle prints as a whole candle. So it's not like you're not seeing the candle, slowly move up and slowly move down and slowly move up and slowly move down. You just see it print, print, print. So you don't necessarily get the full view or the full picture of how that candle looks. So some people actually perform better in backtesting, but if you go worse in backtesting, I don't think that is also a concern. I don't think that's a concern, because you want to be going better at live market trading and real market trading. So if you backtest and you got like a 30-40% win rate, it doesn't mean that in a live market condition you're going to be bad, right? Or you're going to be horrible. It might mean that you're not taking it seriously. That's what I found for myself. I was like, it's just demo, like it doesn't matter. So in backtesting, I was more willing to test out riskier scenarios. But in the live market, obviously, when there's money in the line, you're probably less likely to do it. So it depends. I'd ask you, Dan, what's your live trading like? What's your eval trading like? Is it similar? Is it different? And then we can go from there. From Australia, yeah, from Australia. Scooby trades, do you trade Asian session more or London session? Well, at the moment, I trade more Asian, to be honest with you. And then with the Discord, we go through London. I used to trade more London, but now, just based on my schedule, I try to get my trading done if I can in the morning. That allows me to free up some time, and then it allows me to fully focus on the Discord in the afternoon. But it just depends. Like, for example, here on Friday, this trade here, right, it was a very solid trade. It was overall with the higher time frame trend, which is obviously bullish. And I've got a video, I'll make a video reviewing this, but we sweep the sell side, we invert this fair value gap. So I took a trade here from that inverse, then I pyramided into the position up here once we invert this. And there's a macro here, right? Relative equal highs, power of 3, and bullish overall, and then I got stopped out here. So in this day, because the market moved very aggressively, I traded Asian. And look what happened during London. Like, we had a very quick move down and up. I'm not shorting this. A lot of people ask me, they said, oh, what do you think of this trade? Well, not for me. The short's not for me. I'm not trying to predict when the market's going to turn. That is the all-time high. I'm not trying to predict it. And down here, nah, because there's all this low resistance. I don't know if price is going to pull back and sell off, or if it's still going to go up. So for me, there's nothing here. And then you can see what happens here. We go into chop. We push up and we go down. But yeah, mainly Asian session now, but I'm more look for the volume and the volatility. That'll dictate for me what session I'm going to trade. And also when I'm free. Now I've got a few appointments with the ankle injury. So if I'm out during the day, I may not be able to trade Asian session. I may be out for 2-3 hours and I don't want to trade on my phone. So I'll just trade towards London or more so London. It's just when I'm free. That's what I'd say. Bowser said, I woke up at that 6 a.m. high. I had a feeling it was going to be the high of the day. A lot of trend on liquidity, yeah. You'll never know, you know what I mean? Hindsight's a wonderful thing, but that ended up being, the high of the day. We accumulate here, we have that manipulation up, and then obviously we invert this FEG during that macro, boom, it looks perfect, right? You look back, you go, wow, that's perfect. In the moment, it'd be interesting, right? But obviously from there, we just go down, 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 down. We have a small reversal here during the 950 to 1010, but it's very choppy. And then we just keep going down, down, down. So it's quite interesting. Interesting how these things, how these things play out. But many all-time highs. That's the thing. Many, many, many all-time highs lately, which makes life interesting. All right. So you say you're doing a 50K challenge. It's a paper account. I started last month, and you've taken 12 trades, 7 losses, 5 wins. This is my first time collecting data. I used to delete my data every week. Now I'm up 1K this time. What do you think? Well, that's a good idea to collect data, and collecting data is screenshots, like I said before. But you guys, and this is for anyone, if you're struggling to have confidence and if you're fearful to enter trades after losing, if you're afraid, you're either over leveraging or you don't understand your system well enough. So what you're doing there is good. You got to keep your data, either in Notion, in a Discord channel. You've got to keep your data, and I'll make a video about that. I've got that. That's my recent video. And then you've got to analyze the data. You're like a scientist. Think of it like that. A scientist has some kind of finding that they discover, right? But then they have to analyze that and they have to come to a conclusion. It's the same with trading. You might discover something, you might look at something, but with no conclusion, with no analysis, it doesn't matter. Like imagine a scientific study for those that maybe are interested in science. Imagine a scientific paper. It's got the introduction, it's got like an abstract, it's got what they did, it's got the discussion and then the conclusion. Imagine it had no discussion, no analysis. It's not even a scientific study, the same with trading. So if all you do is collect a screenshot like this, say you took a trade here and all you did, this for anyone, is take a screenshot like this and put it in a journal and say 10 handles I took, win, inverse fair value gap, you're selling yourself short. That's not enough. That's not enough in my opinion. But what you're doing sounds good. What you're doing sounds good. Risking 0.5 or 0.25. Playing around with the risk and doing that on a demo is a good idea. A paper account, because there's no risk. There's no risk. So it makes your life easier, which I think is a good thing. So hopefully that answers your question. What do I think of NQ now? Am I still looking for buys? Yeah, well, let's discuss actually what the market's done and what I'm looking at. And let's also discuss dealing ranges a little bit, because I know a few people have asked about that in the Discord. Now, I want to make a blanket statement here. Everyone's going to draw a dealing range maybe slightly different. It's based on what you see, right? The question I'd ask you guys is this. Look at where the market is right now, and I'll answer it myself, but try to answer it yourself before I answer the question. Where is the highest high and where is the lowest low in this market that you can see on the screen? Have a bit of a look. Where's the highest high and where's the lowest low? And I'm going to mark them out, right? But if you got this, great. The highest high is up here. We'll mark that out in blue, right? And the lowest low of everything I see on that page is down here. Fine, I'll mark that out in red. That's a big range, right? Now, what I like to do when I'm marking out ranges, I like to see price have some kind of movement, like some kind of edge, either a rejection, like a sharp rejection like this, or it's like bounced off that area multiple times, like at the top here. I don't like using a range and using one of these lows. It's such a small low. It doesn't really mean anything. It doesn't really hold any weight. And again, this just comes after trial and error and seeing different things repeat. So when I'm looking at this, I ask myself that. I also ask myself, where is the nearest low? And the nearest low from where price is currently sitting is right here. That is all I need. I think people overcomplicate it. Highs and lows, that's all I need. And then you can zoom in. And this is, by the way, what I'm looking for this week, if you're curious, right, about what I'm looking at. This is the nearest low. Where is the nearest prominent high? Where is the prominent high in this swing? Well, the prominent high in this swing is right here. Notice that? That's the swing. That is the dealing range. It's not this high, but it's the end high. It's the one that's sharp. Does that make sense? The next high will be up here. The next high will be up here. But you start with this. You start with the smallest range, and then you can work with a bigger range if and when we break that range. Who cares if the market comes down? Who cares if the market comes up? We don't need to predict it. All I do here is I ask myself, where are we inside of that range? And the easiest way to do that is to grab your Fibonacci, click on that, go from swing low to swing high. I'm going to make this a little bit thicker. We're sitting at equilibrium. That's great. That's fantastic. Now, to be honest with you, I want price to go higher. So I'm seeing this move down as manipulation. I see a few alternatives that could happen at open and also in the first few days. I can see price doing this, and I'll draw it out, bouncing from here and moving higher, and I'm going to take a long. I can also see price sweeping this low and coming down a bit more. But where would it come down to, Ruben? Where do you think it would bounce from? Well, if we break outside of this range, just visualize this first, from this high to this low. If we break outside of this range, then guess what I'm going to use? The big range. And with the big range, what am I going to do? I'm going to mark out the same thing from low to high in the big range like this. So what would I want price to do then if we break the small range? If you're curious, this is exactly what I'm looking for. This is exactly what I'll tell my premium members tomorrow. I'm looking for price then to come into a discount array, which is this bullish fair value gap, and to bounce from there. And if it does neither of these, well, it doesn't matter. If it doesn't bounce from here, then guess what? I'll look for the next PD array. The next PD array is a bit further down. Right, the next PD array sits down here more. I'm going to look for price to react from there. And if it doesn't react from there, where can it bounce from, Ruben? From this PD array. So don't worry about what could happen. Just have ideas as to what may happen, anticipate things, but then just wait. I do not know. I don't care. I don't care if price goes up from here. I don't care if price goes up from here. I don't care if price comes down and sweep this low. All I'm looking at in these fair value gaps is, does price offer a reaction that my data collection says is good for a reversal? It's as simple as that. So if, for example, at open, price has a nice inversion fair value gap and it looks very nice and my model says to take the trade, I'm going to take a long. If the market sells off, I'm not taking a short. I don't care. I'll let the market sell off, sweep the low, and then observe. Does that make sense? So yeah, for those that wanted a bit of information on dealing ranges, that's kind of how I do it. I know a few people ask me privately, but also in the Discord too. Don't try and predict. Have the options as to when they could happen, and if they happen, then great. If they don't, then doesn't matter. But I don't like having all those lines on my chart. I know ICT does. People love it. Nah, it's too much for me. All I need at open, all I'm going to have at open, I'm going to remove this. When the market opens tomorrow, I'm literally just going to have this up like that. And probably what I'll do is I'll zoom onto the 1 minute chart and I'll just observe price action. That's what I'd say. So yeah, hopefully that answers your question. Bit of a long-winded response, but I think it's important to talk about. SVP, I'm about $300 away from passing a Top Step X combine. You're getting nervous. Should I be taking smaller size or just trade normal and feel like this? You can drop the size. It's normal to be nervous, If it's the first time that you're about to pass an account, you're going to have some emotion. Every new milestone that I reach or that someone else reaches, you have emotions associated with it. You can't prevent that. But what I would say is reduce your size and don't be upset with yourself if you make a mistake. I'm not foreshadowing anything, but don't be upset with yourself. Accept a win, accept a loss. Both could happen. Don't expect that you're going to pass it in one trade. Don't expect that you're going to pass it in 1 week. Just keep trading as per normal. Drop your risk. Risk $100 a trade, whatever it is. Take a week or 2 weeks if you need to. And you'll prove to yourself that even if you take losses, which you will in that time span, that you'll be able to come back from it. That's what I'd say. How many time frames do I use? Yeah, typically just the 15 minute and the 1 minute. There are some situations like when we're in a big range, sometimes I go to like a higher time frame because then you can see, look, we're inside of a 4-hour fair value gap. And then what I like to do sometimes is mark out the quadrants of that fair value gap, if that makes sense. So a lot of people ask about that too. Typically the 15 minute is enough and the 1 minute's enough, but I'll look at the higher time frames here if I need to, and I can do something like that and I can mark out, look, ICT does this, right? With Wix, you can just mark out the quadrants. And I'm looking for price to bounce at these levels. And I can see price has bounced at the 0.25. It could come down further, but I also know that we're bullish. And look what the market's done, just on a higher time frame, just basic market structure. Look at what the market's done. We step up, we pull back. We step up, we pull back. We step up, we pull back. So I still think the market's bullish. I could be wrong, but I'm going to stick with the trend until it's proven otherwise. And that would be if the market inverts this 4-hour gap, then we're pretty bearish. But yeah, typically I just stick to the 15 and the 1. But it's good to have a bit of a look sometimes. Ruben, how do you define your current dealing range? Do you use the candle close, high or low, or is the candle closure better to use as a market structure shift? So don't trade towards the POI, rather you wait. I do both, but it depends where the market is, right? It depends where the market is. So if we go on the 15-minute chart, I don't want to short here. Why is it the case? Why don't I want to short? Because in this dealing range, in this small dealing range, we're sitting at equilibrium. I don't want to short at equilibrium. I only want to short when the price is up here. When the price is down here, I'm not shorting. Unless the draw on liquidity below is really strong. But for me, that's not a strong draw. I like to see low resistance. For me, that's not low resistance. So for me, it's just like, okay, whatever. I'll let the price come down. If we go on the 1 minute, there's too much low resistance above. So I just don't like to short. Yeah, we could sell off, and that's fine to me. But my rules state that if there's low resistance above, and we're at equilibrium of the range, I'm not taking a short. Even if the market sells off like 50, 100 points, doesn't matter. So that's what I'd say. It's just a rule-based thing. It's just a rule-based thing. That's the best way to put it. Some kind of accumulation, manipulation, distribution for the trend. This is perfect. Thank you. No problem. Answer those questions. How do you deal with the days where your bias is wrong, but your entry model still presents and you keep getting cooked? Well, that's where risk management comes into play. So I'll give you a good example from this week. Let's go back in time. So let's have a look. Where is it? This day, there was also no call on this day, I'm pretty sure. People ask me, there was all-time highs. I don't trade that. I don't care that it went up. Doesn't matter. Asian session was better. Let's go back. This day here. It was this day here, right? So this day here is a very good example, right? Look, and it's an example where I say, I don't really care. That's my honest answer, right? I don't mind is probably the easiest way to say it. See how there's low resistance here? And I'm going to mark out the first macro of the day, the first macro of London Open session, which is 150 to 210. Now, if that's your model to short there, do it. I'm not stopping you. Price pulls back, we invert something, you go short, I'm not stopping you. However, I'm not shorting because for me, that's just my rule. There's low resistance liquidity here. I'm not shorting. I know there's two relative equal lows here. And yes, I know we go down quite a lot. But if you're patient enough, the market can't keep going down forever. And that's where my rules come in. So say you longed that, then you'd have to wait, right? So I know some people tried to long that. I sat on my hands there. You could have tried to long and then you flip your bias. But anyway, if you tried to long, if long was your narrative and you get stopped out, you wait for the next macro. And unfortunately on this day, there was a loss involved. But then there was a win that came after. So I was on the Discord call for that drop. And then we looked at longs from here, right? So I believe it was from here. It was from this inverse, right? Stop was here somewhere below this body. And it almost got taken out and then we chopped and chopped. And then as the price came up here, I think one of these candles somewhere stopped us out in profit. Sorry, at a loss. As a smaller loss. And then I hopped off the call, and what I mentioned to the community is I was waiting for this to be inverted, right? And that would be the long, which it was. And it worked out nicely, and it made back losses and it made back profits. But how do you not get cooked? Trade macros only, because that way, even if you trade only, say you trade Asian session, you're going to reduce the amount of trades that you take. If you trade London session, same thing. New York session, same thing. And you've got to just knuckle down and respect risk management, Everyone's different in that regard, but if you take 2 losses, 3 losses, and you've gone over your limit, you've got to either trade on a separate account. You could be right later on, but you don't want to tarnish one account's risk management. Just trying to prove the ego, if that makes sense. If you keep getting cooked like 2, 3 times, you're probably wrong. It doesn't mean you're wrong for the whole day, but it just means you're wrong for probably the next hour, 2 hours, which means that you should probably lock out that account. And if you've got another account, then trade on that later. If not, then as painful as it might be, you have to walk away. And if you can't walk away, you're gonna keep following the same cycle. And I've been there, but you got to have that willpower, that discipline, to either lock that account out and trade another account. So you respect risk management on that first account, or if you can't get that separate account, then as hard as it is, lock yourself out. And until you do that, then it'd be very hard to come back, because you can come back from 2, 3 losses, but coming back from 5, 6, 7 losses, it's feasible. But if you're meant to lose only $400 on a day and you lost 1,200, it's going to take you a long time, and the chances are you're going to tilt before you recover that loss. I've been there, right? So just speaking of personal experience. Blew all my fundeds, tilted, yeah. It happens. You'll be good with 1 mini scale. With that 1 mini, you got over leveraged. I feel, yeah, mental game. It's all a mental game, right? Couldn't stop sizing or clicking, yeah. Once you go past that point of no return, it's like all logic goes out the window. I've been there. You know you shouldn't be taking the trade, but you do, and then you do, and then you do, and then you do, and then before you know it, well, you think to yourself the account is too far gone. So you want to prevent yourself from getting to that point, either by having a personal lockout limit if you're a top step by the prop firms. But what's better is to build the discipline to just lock yourself out by yourself, which is hard, but you've got to do it. Do I take trades only during macros? Yes and no. Like if I see something that has perfect market structure, like this here is outside of macro, 430, I'll take it. Why? Because we've inverted this space that's been used multiple times to move lower. And my narrative to move higher is so strong because I see that as accumulation, manipulation, and now distribution. So I used to be very strict on macros, but now I trade probably 85% macros, and the 15% will be trades like this. But you can just trade macros, nothing wrong with it. It just depends on how you are. Start with that so you build discipline. How many trades do I take per macro? Just one. One, maybe two. It really just depends, How many trades I take per day depends. If I'm trying to do a base hit, like if I'm using a base hit account, I'd rather just take one trade and be done. But I might need to take 3. I may take 1 loss, 1 break even, 1 win. For me, I've got a limit, and it's a risk limit, and it's also a mental limit. Once I reach one of those, I'm done. The number of trades for me doesn't matter as much as the actual risk or the mental limit. So I could get break even 2 times in a row. I could then take 2 losses. That's 4 trades, but I still have enough risk management to take 1 more trade, and I will. I'm not saying you should do that, but that's just what I do, and it works for me. How come you don't mark out all the fair value gaps in a leg when looking for an inverse? It gets conflicting. I don't want to have too much on the chart. Like, saying this leg here, the reason why I waited for this one to be inverted, because I didn't trust it. Seeing as the market was very impulsive, I wanted to make sure that multiple things were inverted. They do exist. There's different inversions there. There's also different inversions here too. But I like to see inversions that have been used before to move lower, previous resistance turned support. And in this leg, I'm just marking the top one, because if we can invert that top one, that means quite a lot. I don't really want to have too many things on my chart, if that makes sense. So I visualize them, but I don't necessarily mark them out. When I trade Asian session, do I look for trades normally during the first hour, or do I wait until Tokyo opens? You've watched it, I believe, 1 or 2 videos. Yeah, it just depends. Like if the open's strong, I'll trade straight away. Like I'll even trade the opening range. I've found ways to trade the first half an hour. It honestly just depends on the volume for me. The volume in the market is a lot. Time is important, but price is just as important. Take this for an example. Does that look like an impulsive 30 minutes of market open? No. So what does that mean? The first macro is probably going to be bad, and you're going to have to wait for the second or the third. That's a very weak open. Don't care about trading that. Not looking to trade that. Compare that to like a different day. The first 30 minutes of price, what do we do here? We actually move. And so because of that, I'm looking to trade that first macro, if that makes sense. So I base it based on how the opening range is the first half an hour. If it's volume based, I'll trade even the opening range. If it's not, I'll wait until the second or third macro and just see when the volume starts to pick up. You don't want to be in a trade when the market is not moving. It's painful, it's a waste of time, and there's a greater chance of you getting chopped up. But those are my tips for trading the Asian session. Do I have any video reviews of my trades in Asian? Yeah, I think I do. I'll just show you guys here anyway. I've made a few playlists, right? I've made a few playlists on my channel. So I'll check that out. And I believe I do have quite a few videos for our Asian session. A few with me live executing, a few talking about it. But if you watch the stuff for London session, it's the same. The market structure is the same. Like I could trade Asian, London, PM, which I will be starting to do this week probably. And it's all the same. The market structure is the same. They just have different volatilities. So, you should be sweet. 7 hours, you say, do I only trade the London session and do I do live trading every day? Not every day. So I'll answer both questions. I trade the Asian session, the London session, and sometimes the PM session and outside of the typical London Open. So I can technically trade all day, but I don't want to be looking at the charts all day. So if I can get a trade done in Asian, I'll do it. And with the Discord, typically it's 3 to 4 days a week. Why not 5? Well, I believe it's important for people to try and implement some things as well in their own charts. And I tell people, if you're from my premium, you're watching this, I tell people to use those 2 days or that day that we're not on the call to implement what we've learned on the calls. And that way it's more of a mentorship, not necessarily like a signal service. I don't necessarily trade live, but I'll be talking through the price as it prints live, saying things like, hey guys, if we invert this, for example, hey guys, if we invert this, I reckon longs look pretty good. I'd place a stop probably below here and I'd target these highs. So it's kind of like a signal, but I don't like the idea of being a signal service because I want people to also learn. But it's enough for people to get analysis from, which I think is quite valuable. So that's kind of how I do it. I don't use order flow. Never looked into it. I know a few people do, they mix that with ICT, but yeah, I think for me, there's so many things that can work, but because I've found something that works, I'm just going to stick to it, I think. What's that old saying? Don't fix it if it's not broke. If it ain't broke. But I think it can work. Order flow can work. Volume profile. The DOM. You can use VWAP. You can use bull flags, bear flags. You can use ICT. You can use market structure. You can use support and resistance. Whatever works, but I just found a way that works without using it. So maybe it would improve my trading, maybe, but I'm not really looking to implement it, if that makes sense. What about you? Do you use the order flow, or are you just kind of curious to learn it? But that's what I'd say. Like Asian session, this is a really good framework. I do believe this is just manipulation down. Like on a higher time frame, we can see that. Like I truly believe that. Could we come down into this gap down here? Of course we could. And look what happened here in the 1 hour time frame. It's just perfect. Look at that. Boom. So we could do that again. I'm very aware that we could sell off into this 1 hour fair value gap again, which would be in a discount of the dealing range, and that would be really nice for a long position whenever that happens, whether it's Asian, London, right? That is an A plus long from down here. It's also around the optimal trade entry. The market's bullish, right? If we were to invert that, and probably if we were to close past this low, then I'd assume we're a bit more bearish. But for now, you can see, right? Stepping up and up and up. And the ranges are opening up too, which is good. These markets are quite nice. Not at all-time highs, but when we pull back, those are the best situations. What time frames do I use for top down? So typically I just start from the 15-minute. It gives me enough information. So say I was doing analysis for the Asian session on Monday. this is what I'd be doing, right? Exactly this. I would start on the 15 minute like this, assume the chart's like that. And these are the words that I'd say to myself if I was narrating it. This is what comes in my head. I'd say, all right, cool. Price has an all-time high here. We've stepped down. Let me just see where we are in the dealing range. This is exactly what I'd be saying. I'd go, okay, interesting. We're not below 0.5 of the range. I'd see where we are in terms of 0.5. Okay, interesting. I go, okay, well, there's a possibility that price could come down here first, react from this 15-minute fair value gap, and then move higher. But there's also a possibility, if the market's very bullish, that we may not want to come this far down. And maybe if the market's really bullish, this can be our sell side sweep here, right? You can see we've swept out that sell side. And maybe the market, this big weak rejection, is going to hold. And so what I'd also do is mark out a range like this from low to high. And then I drop back down onto the 1 minute chart. Sometimes I scale back to the 5. That can be handy. And I go, okay, cool. There's a 5 minute fair value gap here. So I mark that out. And I say, okay, what are my scenarios? And I think about different scenarios. I think, all right, maybe price does this and moves higher. Maybe price just sells off. And with each of those scenarios, I plan out what I'm going to do or if I'm going to do anything if they happen. So, for example, if we do this first scenario, I'm going to take a long. If we come down here and we form an inverse fair value gap, I'm taking a long. I will be. And you'll see it on social media. I'll be taking a long. If price comes down here, 100%. If we come down into this 5 minute fair value gap and maybe price just mucks around, like it comes down here, but it looks very weak, I'm not taking a long and I'm not taking a short. If it sells off and it sweeps this low, I'm watching now. Because again, if and when it sweeps that low, notice how we're also below 0.5 of the big range. So we may sweep that low, come below 0.5 of the big range. And I've seen it many times where we just sweep that external low and then we reverse. So I'm also looking for longs from there. They're just areas where I'm looking for longs. Some are going to require me waiting a long time. Others are going to be, within the first 40, 50 minutes to open potentially. But that's all I do. And then on the 1 minute chart, I just drop down and I'd see, I'd open, I'd drop on the 1 minute chart. I don't need the 5 or 10 minute. I don't need that anymore. I can remove that line too. Don't need that. Too much going on. I know that's the big range. I don't need that. Remove that. I know we're at 0.5. Don't really care about that. So I'd probably remove this too. And that's all I need. And that's kind of what I want to see. So, at open, these are all low resistance. I'd like to see price accumulate here, manipulate, and then distribute, if I'm quite honest. That's what I'm looking for in the first, say, hour or 2 hours of market open, if you're curious, right? And I want that to be the low of the day. I know it's very ambitious, but that's what I'm looking for. Now, that might not happen, like I said. What if price, you might say, Ruben, well, what if price doesn't? What if price just starts moving up and it's very impulsive? Well, if it starts moving up and it's very impulsive, I'm going to wait for this to be inverted. Why that? Why that fair value gap, Ruben? Why not one down here? Well, this is very sharp and it's been used to move lower. So if we can break above that and it's during a macro, that tells me that price is not bearish anymore and we want to move higher. Simple. And then I'll target this high, this high, this high, this high, same thing. But I'll risk less because we're higher up in this range. So I'm going to risk more down here, and if we come up here, I'll risk less. So that's like my top down. Very quick. If you have to rewatch it, go for it. But yeah, that's how I do it. What else we got? Isn't that a bullish order block on the 1 hour chart below? Yeah, I mean, there's order blocks too. I don't use too many order blocks, to be honest. Like, any PD rate can really work. There's an order block down here. That's a bullish order block. So is that. Use them. Like, order blocks are great. Fair value gaps are great. I think all PD rays can work, but you don't want to get too many. What I'd say is, like, if you want to use order blocks as a higher time frame thing, use those. If you want to use fair value gaps, use those as well. Pick one as a higher time frame area and then use that to study. Session highs and lows. It's not that I'm not looking at them, but I'm just looking at what's nearby. You know what I mean? So if we're on the 1 hour chart here, for example, like this swing low that's formed, that was from the PM session, right? If we do sweep a session high or low, and then, I'm expecting a reversal, great. But to me, it doesn't matter. To me, it doesn't matter. If we sweep it, we sweep it. If we don't, we don't. I am looking at them, but it's all about what's nearby. So if I'm on the 15-minute chart, what's nearby is this PM session low and that fair value gap. That's it. For me, that just simplifies the process, but each to their own. Sometimes, like if you sweep like a previous day low or high or previous session low or high, majority of the time, not always, there's a reversal. So maybe for example here, right? Look, this is where we come down. This here is, a low that was formed from the previous day. This is like an AM session low, but notice how we sweep the low and we come down here. It's not random. Look, 15-minute fair value gap. We react from that. We find support there. Accumulation, manipulation, distribution. So yes, you can short it, but you can also long it. I don't need to wait for price to invert a 15-minute gap because price has come back down into discount and I'm bullish based on the fact that we just keep stepping up. So all I'm looking for then on the 1 minute chart, look, if we zoom back, I'm just looking for an inverse. And it just happened to be, unfortunately, that it chopped around. It happens. So to prevent getting chopped out in this, enter once, give it a bit of breathing room. If it chops, wait a bit, try your stop. If you get stopped, leave it and wait. Wait. I mean, there's good trades over here too. Look at that. That's real nice here. So you can trade whenever you want. Like this trade here is quite nice. We pull back into the range. We have low resistance liquidity. We have an inverse. We have a macro. Perfect. New York session, what happens here? Well, this is very messy in my opinion. Like, I don't know if I would have longed that. I know there's a long there, but I don't know if I would have done it. We come down. We sweep. We don't sweep that low. We form equal lows. If there was SMT there, maybe. Maybe I'd take a long position from here. But in these situations where it's very volatile, my advice would be let the inversion happen. Let it trade a bit more and then enter off like an order block up here somewhere. And that way you can have a tighter stop. If your draw is still there, have a tighter stop below this low. Instead of entering here and needing like a crazy wide stop. That's way too wide. And if you had it here, you're going to get stopped out. And if you do get stopped out, you just look for another entry. It's just probability. But you can see how the market moves. Massive run up. Boom. Drop down. If you see that and you're trading New York session, I wouldn't trade the rest of the session. You've missed the move. You're going to get chopped out more than likely, in my opinion. So if you miss that, if it happens at open, we'll probably continue for a little bit longer. And then after that, we're just going to chop. So that's how it goes. Does a 1 hour fair value gap above not matter to me? Let's have a look. Which fair value gap? Do you mean this one up here? Or are we talking about a different example? To understand, you account for session high and low, but prioritize structure and price narrative rather than session time levels. Yeah, that's a good way to put it. I prioritize structure and price rather than session or time levels. Like, I don't just trade towards London low because it's close. I know when we might gravitate towards it, but many times we'll reverse first. I'm more focused on ranges, low resistance liquidity, and if the session low or high ends up being a part of that low resistance, then fantastic. But if it's not, it doesn't bother me. That's just the way I see the market. Personally, don't like back testing. Been doing forward testing. Yeah, that's a perfect idea. Back testing, I've done a little bit for guys, but I'll be honest, really not more than 20 hours. Like, I'm being honest there, not more than 20 hours. The only time I back tested at the start was just to see things, because I ran out at the time with my subscription. I didn't have the max subscription on TradingView, so I ran out of data. I had to go into backtest. But apart from that, I just took a couple months to collect data. And at the time, I was trading London session and New York session. So I collected data for 2 sessions, which kind of gave me double up of seeing the same things repeat. And then you start to notice patterns, like I said. If you review your trades and you review what happened, if you really look at why the trade really worked or why the trade didn't work, you're going to start to come up with confluences or combinations of things that make a good trade. But you have to see it in your own eyes, because I've got a checklist. If you're not in the free Discord, join that. I've got a free checklist there. There's 7 things, right, of how to trade macros, different things to look for. You can use that, but you need to see it for yourself. If you just look at the checklist, you won't believe it. You need to look at the examples for yourself in the chart. So in terms of your question about, is it okay to try an eval now? Well, how do you feel? What's your win rate? Do you feel confident in your system? You know, do you see patterns repeat in the market? Are you able to describe your strategy to someone in 1 paragraph? If not, more data collection. Because you need to be able to, explain it in a simple term to be fully understanding of what you're doing. Scooby Trades, the one above, this one here. So for me, that fair value gap doesn't mean anything unless we trade into it. This one here. So there's so many scenarios. That's the thing. Like I don't worry about things if they're nowhere near price. Like that is nowhere near price. So all I'm worried about is the current range that we're in, and the likely scenarios that either we react from here or we go back down into this FVG down here, and then we react from there. If I'm completely wrong, and let's say we open up and the market goes boom, and we just open aggressively, and I'm like, whoa, what's happening here? If that happens, Scooby Trades, if that happens, and if the price, literally just shoots up and I don't even get an entry to go long, well then yes, if price is up here, I'm going to look at that fair value gap, but I'm probably more so going to look at the 15 minute, to be quite honest. And what I'd be doing is I'd probably be marking out this one. And what I'd do, again, I'd get the most recent prominent high, which is this one, and the most recent prominent low. If price is up here, I'd then be pulling a Fibonacci on this range, and I'll be saying, interesting, price could reverse from here, and I'll be looking for a short. If the draw on liquidity as we move up is strong, I want to see if the market did that. Here's the thing. The market could just shoot up. I probably wouldn't short it because that's too aggressive. But if I miss the longs and the market just gradually works its way up like this, 100% I'm looking for a short up here. All that low resistance. So it does matter. It matters how we trade into that point of interest. That matters for me too. But I'll worry about it if we engage it. That's my overall answer. If we don't engage it, then it doesn't matter too much for me. Simplifies things. Movie clips, you say you use a sweep, change in the state, retrace. Yeah, that's a good model. I like it. Glenn, welcome. Any questions, post them in. I'm going to stay on for another, I reckon, 5-10 minutes. So ask away. And I'll be hosting these once a week, once a fortnight. They've been once a week lately. They may go to once a fortnight, or it might be a bit more spread out, but I'll post about it. And it's typically going to be on a Sunday. Typically. That's, like the stream if you haven't already. Subscribe if you're not subscribed. When we get to 10K, I'll be doing a giveaway. I'm with an affiliate, I'm affiliated with My Fund of Futures. FET is the code. So I'm going to try and work something out with them. I'm also in the process of trying to get affiliated with Take Profit Trader, who I've recently got a few accounts with. I like testing different props. Not every prop, but props that kind of suit the way I've traded. So Take Profit Trader, the reason I like them is because once you're above the buffer, you can take daily payouts. So I'm just kind of curious to see how that goes. Top Step, they don't do affiliation. They used to, but not anymore. Otherwise, I would be. But I'm kind of rolling through all three. Top Step, My Fund of Futures, and now TPT. Just recently. Yeah, journaling and data collection are different. I made a video on it about what data collection is. Journaling, in my opinion, is getting a journal, say using Notion or using a Discord channel or using a Word document. Journaling is, for example, taking a trade, say the trade I took here in Asian session, taking a trade, annotating the chart, taking a screenshot, win, loss, how many handles, risk to reward. That's journaling. For me, and this is just me personally, I don't hate on anyone that does it. For me personally, I haven't really journaled my emotions too much because I don't truly believe in trying to allow emotions to come into my trading too much. And for me, that's what's worked. But for other people, they like to journal the actual trade and their emotions. For me, I'm more the statistics. I'm more what's the market doing? What patterns can I see? What repeatable patterns are there? So journaling is just stowing it away. A lot of people just stow it away and then they look at it and go, oh, cool. This week, I made 2%. I lost this one. I won this one. Oh, yeah, I did this. But it's not enough. Data collection is journaling, yes, but it's also data collection is watching the market live. Data collection is using ChatGPT. I'll talk about that in my recent video. Data collection is collecting the data and then analyzing the data. So looking at this and looking at all the market structure elements that could have led to this being a very nice trade. I don't just say to myself, oh, great trade. A 1 to 2, oh yeah, cool, perfect. No, I say to myself, yeah, fantastic, it won, but why did it win so good? Why did the market move so aggressive? Why did the market keep running? Why did it not pull back? Why did the market bounce here? Why did the market stop here? Why did the market stop there? Why did the market stop here? So I'm asking myself these questions. That's data collection. If you just journal, you won't see the pattern strong enough in your head and you won't build confidence in the system. If you journal and you collect that data and you analyze it, you're in really good hands. Really, really good hands. Because then you're seeing the patterns repeat. And don't neglect your losses. Like, don't do that. Don't be the person that goes, oh, I took a loss, I'm not going to think about it. Those are the most important ones to look at. You want to look at the trades, right, that go really bad because you want to try and fix them, make them less bad. And you also want to look at the trades that go really good. Really good and really bad. You want to look at the extremes because what you want to do is you want to get more of the really good extreme and less of the really bad extreme. A small win, a small loss, that's okay. Who really cares? But those big wins and the big losses, they're the ones you need to know about. They're the ones you need to look at and go, wait a sec, why did I take such a big loss? Or why did I take such a big win? What were the characteristics? What were my emotions? Was I trading with greed? Was I trading with fear? Or was the market structure actually suited to my model? And are there any patterns that I can look for in the future that would indicate to me or hint to me that the market's going to run just as aggressively? So that's what I'd say. Hopefully that answers your question, SVP. No, not a copy trade at the moment. I will soon though, with Top Step. So I'll just trade my accounts individually. Take a trade or two in Asian, in London, that's enough. It's a process. Too many people try rushing it and then they blow up. Just take it easy. Grow. Start with one account, then try to go two. Then once you go two, try to go three. But you might not even need that. It depends on what your goal is with trading, in my opinion. Are you trying to make a little bit to start? I wouldn't even worry about the future too much. Worry about the present. Worry about the now, and focusing on building confidence in the system. That's what I'd say. But yeah, great to have you guys here. Any other questions? Post them in. I'm going to hop off in about 5 minutes in 11:30, which will be about 4 minutes time. This will be recorded, right? This will be live now, and then obviously recorded after. So for those that maybe came a bit later, plenty of information before. We do this once a week, once a fortnight. And if you haven't yet, join the Discord. It's free. All right? Join the Discord. I've got a nice checklist in here. This is for free. So go into the free education section. That's going to help you a lot, in my opinion. A lot of people seem to like it. That's fine. Got plenty of people discussing things in there, which is great. You can ask questions here. That's cool. And that's that, right? So look into that. Twitter, if you're not yet following me there, go give me a follow. I post there pretty frequently. I'm kind of using Twitter more like Telegram now. I'll be posting trades, trade recaps, all the rest of it. And then YouTube, obviously, yeah, hit that sub button. When we get to 10K, which we're getting very close, I reckon the goal is by the end of the month, if we can, then I'll be doing a little giveaway. Haven't really figured out what's going to happen with that giveaway yet, but I want it to be something where you have to be kind of engaged. You know what I mean? Because I know some people are very active members, so there's going to be something that that revolves around that. But everyone will be able to enter, so I'll post it everywhere. Because I know some people can't join the Discord for whatever reason, which is fine. Glenn, I am going to give you my email. Send me an email, and I'm going to send you that link. And this goes for anyone too. That's the email. Send me a link, or send me an email. I'll send you the link back, and then we'll go from there. But yeah, nice to have you guys here. Enjoy your weekend. You know, spend the weekend to study a little bit. Yes, put in the work, but enjoy it. Refresh. Come back in the new week with a clear mind. We discussed a little bit today about dealing ranges. We discussed, you know, what I'm looking for, and I've done a few of these now. I've done like 5. They're good study tools in my opinion. And you know, if I was watching these videos as a trader learning, I would watch them, and everything I talk about, and this applies to anyone that you watch the video, document it down, but then what you really need to do is to ask yourself, what are the core concepts that Ruben's talking about, or what are the core concepts that my mentor is talking about, or this other person that ICT is talking about? What are the core concepts? And list those core concepts down, write them down. Once you've got those written down, you need to go back, you need to watch videos on those core concepts. Once you understand that, you need to go back on your charts and you need to chart out these concepts. And you need to find 50 to 100 examples of these things. That is true data collection. That is true putting in the work. That will give you confidence. It will give you confidence. Because if imagine you've seen something happen 100 times, you're going to trust in it. If you've only seen something happen in my videos once or twice, how are you going to trust? You can't expect yourself to trust in it if all you've seen is once or twice. That's my advice. So yeah, nice having you guys here. Have a great weekend. And we'll hop on for another session probably next week or the next fortnight. We'll see how we go. If you're not yet, join the Discord. Give me a like, sub. And any comments on this video I do respond to. I respond to pretty much all the comments. Good or bad. You know, I have a bit of fun with the troll. So it is what it is. But yeah, guys, have a great weekend. We'll talk very soon. All the best. Peace out.